Welcome back to the Global Commerce Academy, your go-to source for 100% free CMA USA classes. We're continuing Section B Planning, Budgeting, and Forecasting, and today's focus is Chapter 2 Budgeting Concepts. You'll learn why budgeting is a foundational tool for management accountants and how it drives organizational planning and control. Budgeting is the process of preparing a detailed plan for how an organization will allocate its resources over a specific period. It involves forecasting income, estimating expenses, and making informed decisions about where money should be spent to achieve the company's goals. This process is not just about crunching numbers, it's about understanding the bigger picture of the business and ensuring that every dollar is used wisely. By creating a budget, organizations can anticipate future needs, avoid unnecessary spending, and make sure they have enough funds to cover essential operations. It sets financial targets and allows businesses to control costs, coordinate efforts, and evaluate performance. With a well-structured budget, teams can work together towards common objectives, track their progress, and quickly identify areas where they might be overspending or underperforming. Budgeting also helps in prioritizing projects, making tough choices about what to fund, and ensuring that resources are allocated to the most impactful activities. Regularly reviewing the budget keeps everyone accountable and focused on the organization's strategic priorities. Think of a budget as a financial roadmap. It shows where the business wants to go and how it plans to get there. Just like a GPS guides you on a road trip, a budget guides a company through the financial year, helping it navigate challenges, seize opportunities, and stay on course. It provides a clear path, outlining the steps needed to reach financial goals and highlighting potential obstacles along the way. For CMAs, budgeting is not just about numbers. It's about strategy, resource alignment, and accountability. CMAs play a crucial role in designing budgets that support the organization's vision, ensuring that every department is working in harmony towards shared objectives. They help translate strategic plans into actionable financial targets, monitor progress, and provide insights that drive better decision-making. Ultimately, effective budgeting empowers organizations to achieve sustainable growth, adapt to changing circumstances, and build a strong foundation for long-term success. Here are the core objectives of budgeting. Planning helps predict income, expenses, and resource needs. Control acts as a benchmark to monitor actual versus planned performance. Coordination aligns all departments with the company's goals. Communication clearly conveys goals across the organization. Motivation sets performance targets that drive teams to excel. A good CMA ensures that budgets are realistic, aligned with strategy, and performance-linked. A strong budget should be comprehensive, meaning it covers all departments. It should also be flexible so it can adapt to changes. Realistic budgets are based on solid forecasts. They need to be communicated, meaning shared across teams and accepted, backed by leadership and staff. Without these traits, even the best designed budgets can fail. That's why the CMA's role is key in budget design and execution. When it comes to managing finances, organizations rely on a variety of budgets, each designed to serve a specific purpose. Understanding the different types of budgets is essential for effective financial planning and control. Let's explore some of the most common types of budgets used in practice and see how they help businesses stay on track and achieve their goals. First, we have the operating budget. This is perhaps the most frequently used budget in any organization. The operating budget focuses on the income and expenses related to the day-to-day operations of a business. It includes projections for sales revenue, cost of goods sold, administrative expenses, and other routine costs. By carefully planning and monitoring the operating budget, companies can ensure they have enough resources to cover their daily needs and avoid unexpected shortfalls. Next, there's the capital budget. Unlike the operating budget, the capital budget is concerned with long-term investments. This could mean purchasing new machinery, upgrading technology, or constructing new facilities. Capital budgets help organizations plan for significant expenditures that will benefit the company for years to come. These decisions often require careful analysis, as they involve large sums of money and can impact the business's future growth. Another important type is the cash budget. The cash budget predicts the timing and amount of cash inflows and outflows over a specific period. This helps businesses ensure they have enough cash on hand to meet their obligations, such as paying suppliers, employees, and other expenses. Effective cash budgeting can prevent liquidity problems and help organizations avoid costly short-term borrowing. Finally, we have the master budget. The master budget is a comprehensive financial planning document that brings together all the individual functional budgets, such as sales, production, and cash budgets, into one overall plan. It provides a complete summary of the organization's financial goals and strategies for a given period, usually a fiscal year. The master budget serves as a roadmap, guiding the company toward its objectives and helping management make informed decisions. Each type of budget serves a unique and vital purpose in the financial health of an organization. Certified management accountants, or CMAs, play a crucial role in building, analyzing, and managing these budgets. Their expertise ensures that every budget aligns with the company's overall strategy, supports decision-making, and drives long-term success. The budgeting process typically includes several steps. First, setting strategic objectives. Then, communicating assumptions. After that, collecting departmental inputs and consolidating them into a master budget. The process continues with reviewing and approving, and finally, monitoring and adjusting over time. The CMA ensures each step is data-driven, participative, and strategy-aligned. There are two main approaches to budgeting: top-down, where senior management sets goals and allocates budgets, and bottom-up, where departments create their own budgets, which are later consolidated. Many companies actually use a hybrid approach, and CMAs are key players in facilitating communication between levels. So let's take a moment to summarize everything we've covered in this chapter. Budgeting is a fundamental skill for every management accountant, and understanding its concepts is crucial for your success as a CMA. Throughout this chapter, we explored not just the technical aspects of budgeting, but also its strategic importance in the business world. Remember, budgeting is much more than just crunching numbers or performing calculations. It's a powerful strategic tool that organizations use for planning, control, and performance evaluation. It helps businesses set clear objectives, allocate resources efficiently, and monitor progress towards their goals. As you've seen, effective budgeting can make the difference between a company that thrives and one that struggles to stay afloat. As a CMA, your role goes beyond simply preparing budgets. You are responsible for ensuring that every budget you create or review truly reflects the organization's vision, mission, and long-term strategy. You'll need to collaborate with different departments, analyze data, and provide insights that support efficient resource allocation. Your expertise will help drive better decision-making and contribute to the overall success of your organization. This was Chapter 2, Budgeting Concepts, from Section B, Planning, Budgeting and Forecasting of the CMA USA 2025 syllabus. We covered the key principles, types of budgets, and the role of budgeting in organizational planning. Make sure to review your notes and practice the sample questions provided to reinforce your understanding. If you found this chapter helpful, don't forget to check out the other chapters in this series. Each one is designed to help you master the CMA USA syllabus step by step, with clear explanations and practical examples. Be sure to subscribe to the Global Commerce Academy for all CMA USA classes, 100% free, structured, and exam-ready. By subscribing, you'll get access to comprehensive lessons, expert tips, and valuable resources to help you succeed in your CMA journey. Thanks for watching, and see you in the next chapter.